Okay, so let's have a look at the fifth adjustment for Melba Ltd 2015 company account. So this is the depreciation question or depreciation adjustment. So provide for depreciation on delivery vans at an annual rate of 15% of cost from the date of purchase to the date of sale. So when we buy it, we're going to have depreciation. For the length of time, we're going to have depreciation. When we sell it, we're going to have the depreciation. So on the 31st of the 3rd, 2014, a delivery van which cost $30,000 on the 31st of the 3rd, 2011. So we're getting rid of this van. So that's what we need to reduce our vans by, our vehicles by, was traded in against a new van which cost 56. So 56 is what we're increasing our vans by. Allowance of 8,000 was given on the old van. So the new van cost 56. We got 8,000 of allowance on it. So that's how much we purchased it for. So we purchased it for 48. The check for this net amount of the transaction was entered in the bank account, but incorrectly treated as purchase of trading stock. So it's not purchase of trading stock. We're not taking this van to sell it on. So we need to take that 48,000 away from our purchases. Now it's the check that we need to adjust our purchases by. The check is the difference between the allowance and how much the van cost us. So the van cost us 56. We didn't pay the full 56. Why? Because we got an allowance of 8,000. So that means the check is for 48,000. So 5 parts of this question you need to do. 1, you need to find the value of the vans for this year. That goes in the balance sheet as a tangible asset. Find the depreciation of the vehicles for this year. That goes in your profit and loss account in your selling distribution. Find the cumulative depreciation for the vehicles for this year. That goes in your balance sheet as a tangible asset underneath your cumulative depreciation. Find out if you made a profit or loss as part of a disposal. If you made a profit, it goes to operating income. If you made a loss, it goes into your selling and distribution. Remember, a profit will be on the debit side, a loss will be on the credit side. And then we need to reduce the purchase figure with the check amount that goes into your profit and loss and your trading. So first thing we need to do, we need to find out what is the balance for our vehicles and find out what is the balance for our cumulative depreciation. Remember, vehicles are an asset, so to increase it, it goes on the credit side. To decrease it, or to increase it, goes on the debit side. To decrease it, goes on the credit side. And your cumulative depreciation, your opening balance will be on the credit side, and to decrease it, goes on the debit side. So the first thing we need to do is find out the vehicles, how much the balance was. So we're going to go back to our question. We're going to go to our vehicles, our vans. So delivery vans cost us 250,000. So that's our opening balance. So 250,000 on the debit side. Now to find out what is the cumulative depreciation. So back to our question. It's now valued at 170,000. So there's a difference. That difference of 250 and 170 is your depreciation. So 80,000 now is your cumulative depreciation. The next thing we need to do now is we need to take the van that we bought out of our vehicles. So the van that we sold. So the delivery van which cost 30,000 because they had cost 30,000 on the 31st of 3rd, 2011. That's where we're going to reduce our delivery vans by, and we're going to stick it into our disposal. So we're going to credit our delivery vans to reduce it by 30,000. And we're going to debit our disposal by the same amount. And now we're going to increase our vehicles then by the amount that we bought. So we bought a new van and that van cost us 60,000 or 56,000. So 56,000 is the new van, so you need to increase that, our vehicles by 56,000. So now we can balance this off and find out what is the value of our vehicles. That's going to go into your balance sheet. So your balance then is 276,000. Okay, so that balance, you can bring it down if you want. And that figure then is going to go into your balance sheet as a tangible asset. So that's number 1 done. Find the value of the vehicles for this year. Number 2, find the depreciation of the vans for this year. Okay, so we need to find out, and we also need to find out the depreciation of the van that was sold. So the first thing we're going to do is we're going to find out how long do we have this van for. So if we look at the question, the van So on the 31st of the 3rd, 2014, a delivery van which cost 30,000 on the 31st of the 3rd, 2011. So you're going to take the 31st of the 3rd, 2011 to the 31st of the 12th, 2011. We had it for 11 months. The 1st of the 12th to the 31st of the 12th, we had it for 12 months. 1st of the 1st 13 to the 31st of the 12th 13, we had it for 12 months. And the 1st of the 1st 14 to the 31st of the 3rd 14. Why is it 31st of the 3rd? Because that's where we are now. Okay, that's when we sold it. So we had this van that we sold for 36 months. So what we need to do is find out how much is the depreciation. So we're going to take the value of the van, which is in the question of 30,000. We're going to multiply by the rate, and then we're going to multiply by the length of time we had it. So it's 30,000 multiplied by 15%, multiply that by 36 months divided by 12. So the depreciation on the van that we just sold was 13,000. So we need to reduce that and stick it into our disposal. So we're going to debit our accumulated depreciation account by 13,500, and then we're going to debit our accumulated depreciation account, and we're going to credit our disposal account. 13,500. Now we've taken the van that we just sold, we've reduced our vehicles by it, and we've also reduced the accumulated depreciation as well, because that would have been part of the 80,000, but now that we got rid of it, we need to take away our depreciation from it. Now to find out the depreciation for vehicles for this year. So there's three parts to that question. Okay, we've got our vehicles for the whole year, which is at 250,000 minus the 30,000. Okay, so that's going to tell us how much are all our vans in our storeroom or in our garage. So that depreciation is 33,000. This van that we sold, we had it for 3 months for this year. So we need to find out what is the depreciation on that. So it's going to be 30,000. Multiply that by 15%. Multiply by 3 divided by 12, because we only had it for 3 months. And then this new van that we bought for 56,000, we had it for 9 months. So we're going to find out 56. Okay, so in the question, it tells us that we didn't get this new van until the 31st of the 3rd, 2014. So up until the 31st of the 3rd, 2014, we had this van, which was 30,000. And then from the 1st of the 4th, 2014, it was a van for 56,000. So we need to have those two as part of our adjustments. So we're going to add these three up. So all our vans, the van that we sold and the van that we bought, and the total depreciation for them is 40,425. And that figure then is our depreciation for this year. And that's going to go into your profit and loss account in your administration. So up here, we've got profit and loss. And the profit and loss figure is 40,425. Now we can find out what is the accumulated depreciation by just balancing off this account. So we're going to add up the credit side. We're going to take the 120,425. We're going to take away the 13,500 from it. That's going to give us our balancing figure. And that's going to be the figure then that goes into your profit and loss account as part of your tangible assets. You can bring it down if you want. So that's going to go into your balance sheet as tangible assets for accumulated depreciation. And then don't forget this figure here. That's going to go into your profit and loss as part of your selling and distribution. And the second last part, find out if you've made a profit or loss from the disposal. So we're going to have your allowance. So the allowance that we had in the question is 8,000. Okay, so the value that we have for our car that we sold is 30,000. What do we get for it? We got about 20. So we made a loss in it. So we got 21,000 out. So we made a loss of 8,500. So the easiest way to try to remember this is how much the car is worth. So it's worth 30,000. How much did we get for it? We got the cumulative depreciation 13,500, the allowance of 8,000, so it's 21,000 is what it was worth. The value of it was 30,000, so we made a loss of 8,500. Remember, your loss will be on the credit side, your profit will be on the debit side. And that's going to go into your profit and loss, and it's going to go underneath your selling and distribution. And the last part then is to adjust your purchases figure. So we have an account for purchases up here. So the amount we have is over 1 million, the check. Remember that we're only going to record the check that we wrote for the van. So the van was 56, the allowance was 8. So the difference between them is the value. So 56,000 minus 8 is the value of the check. So our check was 48,000. Check shouldn't be in as part of purchases because we're not going to sell this van on. We're going to hold on to it. So our purchase figure now is 1,066,000. Alright, so once again, these can be going across just like we did with our up here. You can have them going across like this. I'm just doing it for teaching purposes, and I'm having them each side by side, like I have here. Okay, so when you get your depreciation, 5 things that you're always going to have to do: find the value of the vans for this year, find the depreciation of the vans for this year, find the cumulative depreciation for the vans for this year, find out if you made a profit or loss, and reduce the purchases. First thing you're going to do, get the opening balances and the trial balance. So this figure will be given to you. You need to calculate this 80,000. So this was the 250,000 minus the 170,000. Then you're going to get rid of the van that we sold, add the van that we bought, and then balance off your vehicles account to find a figure that goes into your balance sheet as a tangible asset. Your cumulative depreciation then, you're going to take away the depreciation of the van that we just sold. So that's finding how long do we have the van for, taking the value, multiplied by the rate, multiplied by the length of time. So 30,000 by 15%, multiplied by 36 by 12 over 12. That's going to reduce your cumulative depreciation, and that's going to go into your disposal account. Then you're going to find out the value of our depreciation for our vans for this year. So 3 steps: all vehicles, the vehicles you sold, and the vehicle that you bought. Remember, all vehicles is going to be the 250 minus the van that we sold. And then you're going to do the van that we sold separately and the van that we bought separately. That's going to go into your profit and loss account. And then this is your cumulative depreciation. That's your balancing figure that goes into your balance sheet as a cumulative depreciation. Your disposal then, you're just going to add your allowance. If the balance is on the credit side, it's a loss. And if the balance on the debit side, it's a profit. And then don't forget to adjust your purchases with the check amount. So sometimes you have purchases already opened up here. So to check, the value of the van was 56,000, the allowance was 8, so the check that we wrote was for 48,000. So your 5 steps for depreciation of vehicles adjustment.